Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders, and we've got Blane Markham back with us. Blane, great to see you, man. Hope you had a great weekend.
Yeah, absolutely. Yeah, appreciate it, John. Great to see you too, and thanks so much for having me here for this Monday morning eye opener. Always love being here.
Yeah, man. So interesting week. I mean, we come off. It feels like these weeks are going by so fast, but then they seem like they're so far behind. Nvidia earnings last week, I thought it was going to rock the world, and I think it kind of bobbled the world. I don't think it rocked it. It wiggled the world maybe. A little bit of a nothing burger for me, but you know, uh, i- looking at this week now, everybody's like shifting right ahead and looking for the next event. So I know I was reading the Market Periscope article that you did. Great weekly kind of overview of what to look for. I love those things. Really great content to have available. But interested in what is on your radar this week and what's catching your attention.
Yeah, 100%. Yeah, well, I definitely have a couple things, and we can go ahead and hop right into it because certainly a few things here on the horizon for this week that traders out there should definitely at least have on their radar, be aware of. So let me go ahead and take over the screen share here, and we can
Sure.
get rolling here. So let me get this set up here on my end. So you should be able to see my screen here, John. Can you see the chart for the S&P here?
Yeah, absolutely.
Perfect, perfect. Well, I'm just going to start off just with a quick just overview of just the market and just where things stand just as we head into this new week. So, we still are trading above the 200-day moving average, which is a very significant technical confirmation of this current move that we've experienced off the April lows. We from the early April lows to the recent peak and this near high that you can see right here, we rallied just about 24% in just about a month's time. So, I mean, it was just an absolute rocket ship higher. So, we have broken through some really key resistance levels that have now flipped to support levels. We did see a successful retest of the 200-day moving average this past week. You can see on this Friday, this is a couple weeks ago. This was a Friday trading session. We traded right down to it. And then all of last week, all 4 days that the market was open last week, we rallied back higher on Monday, and we kind of stayed, range bound over the past week. But all that's really important, though, is because we have still remained above the 200-day moving average, had that successful retest, and are now just kind of trading roughly in a range-bound zone that we've been in for pretty much the past 2.5 3 weeks now at this point. So still the technicals look very strong. Confirming that this move off of the lows from April was legitimate and should be trusted. But keep it in mind, and you kind of touched on this, you talking about last week with the Nvidia report. They knocked this. They had a blowout report. It was a great report that they had, but I think they kind of fell victim somewhat to their own past successes and also just the recent move of the market. If the market had not just rallied nearly 24%, we probably would have seen a larger effect market wide, at least particularly in those AI related names. Nvidia had a big pop, but it didn't have much of an effect outside of just that one stock.
Yeah. Do you see, really quick, do you see a little bit of desensitization of the market as we went through such a high period of volatility where it was really wild and we saw the big dip, the rally back, and the headlines are all over the place. And I feel like it's all relative, right? So if you have incredibly loud noise, a scream doesn't sound as bad. But if it's completely quiet and somebody whispers, everybody hears it. If that's any kind of an analogy. But I just wondering your perception of this kind of desensitization of stuff like Nvidia really not moving things very much.
No, you're 100% hitting on something with that, regarding the desensitization from investors. At just some point, it's kind of like the old story, the boy who cried wolf. You sit there and hear, oh, something's going on, and after a while, you just kind of, become, like, oh, it just, kind of blasé to the whole thing. So, we're seeing some of that with the tariff news. We get a tweet one day that there's going to be 50% tariffs on the EU, and then 2 days later, things are going great, and it's been put on pause, and we're having talks now. So I think somewhat investors have become to gotten wise to that a little bit. Perhaps complacent. It could be complacency, but at least up until this point, people have been rewarded for kind of looking through that noise. So I think we're starting to see the market more adopt that opinion of
Mhm.
just trusting that over the long term, things are going to sort themselves out. kind of block out that near-term noise. And, with that, I think it's also, as you said, translating to some of the headlines, some of the other positive headlines. We had a number of really good developments last week. We had a great report for NVIDIA, which it moved the stock, but it had, relatively little effect on the market. We also had a great inflation report, PCE inflation report on Friday. We didn't get much move from the market regarding that. And also, as much as has been in the news lately, long-term U.S. Treasury yields, because they have been on the uptick lately, those kind of sold off last week. We had a meaningful pullback in the long-term rates, which had been spooking investors. And, with all that happening, all those significant things, we still didn't see the index level, at least stocks at the index level, we didn't see them break out to a near shorter term high. We still kind of have this lid on the S&P 500, right around the 5950 level. So, I think investors certainly are becoming a little desensitized, as you said, to, the positive headlines and the negative headlines as well, just because of the recent move. I think we're going to be probably stuck. And this is what I was going to move into next, John. I think because of that, exactly what you touched on, and just the move that we've had, we've gained so much ground so quickly with this V-shaped recovery that, as you can see, we at least in the short term, we have a new level of resistance that we're trying to break through right here, and it's roughly right at 5950. And I think it's very reasonable to expect that the market's probably going to chop around, maybe trade a little bit range, excuse me, a little bit range bound for the next couple weeks and perhaps a month to come, as we move right into the early part of summer here. Just because at some point these gains have to begin to consolidate themselves, consolidate the shareholder base before we can continue another leg higher. But that the key level to watch out for is going to be 5950 to the upside, because that seemingly is where stocks have gone up and kind of had a ceiling there above them at that level. But once we're able to break out through that level, there's really not much between there and the all-time highs for the S&P that we set back in mid-February, just a little bit above 6,100. So there's kind of an air pocket there. So once we're able to crack that 5950 level and close above it, meaningfully for a couple days in a row, I think that's when we're going to begin to take that next leg higher.
Yeah, no, that's really really cool to see. So 5950 is a number to watch, not to be confused with 5150, the Sam Halen album that of legend. But yeah, 5950 is where we got our eyes on, and looking to see what happens. How about to the bottom side? What's your take on that? What are you looking for? Is it back to that previous support level that we built like right after we took the last breath after a rally?
Yeah, I mean, I think, largely that we're going to see being stuck range bound somewhere between 5950 and, about, roughly where the 200-day moving average is. We had the successful retest. We've been trading above it for, just about 3 weeks now, maybe a little over 3 weeks worth of trading days. So, we've had a reliable, consistent move that has been durable above that level. So we have, a pretty solid floor support there right at the 200-day. I wouldn't expect it to break down, trade back through, below that and remain below it for any long period of time. Of course, that is, absent any significant negative developments. Obviously, you can never predict things like that, but, just at current status quo, if things continue as they currently are. So, probably somewhere around the 200-day moving average. It is actually slightly sloping up now. So, we could see that range begin to tighten in on the bottom, which that's a good thing. It's good to see the 200-day moving average actually sloping up now and regaining some strength. So, we could see a bit of a rising floor in this range, and that, ultimately could help to push stocks higher as well.
Got it. And so where does this lead you to look for the next trade? What is it that's kind of got your attention in terms of actionable activity this week?
Oh, yeah, absolutely. Well, appreciate you asking. And that's what I was going to hop into next. And kind of as I touched on last week, we have just had a fantastic rally off the lows, but over the past couple of weeks, the momentum has certainly kind of stalled out. We've lost momentum at the index level, but there's certainly still pockets of strength across the market that we're still performing quite well, still making new highs. pretty consistently day after day, and are showing very strong relative strength, compared to the index level for stocks. So one of these areas that I mentioned last week is just broadly the financial sector. So I think
Mhm.
we looked on Wednesday of last week at a chart of the XLF as an area, it's a pocket in the market that I'm personally looking for different opportunities right now myself. And there's, that's a pretty broad and diverse sector. Financials is a pretty encompassing term. But that's actually what I'm going to look at today is one of these specific examples from the financial sector. And here's the chart right here I want to draw your attention to. It's going to be for ticker ICE. So this is the Intercontinental Exchange Group. So this company, they're massive financial. They're an exchange operator for equities, commodities. They're best known for, one of their subsidiaries is the New York Stock Exchange. So that's what this company does. They're an exchange operator, very key part to the financial system here globally. And this is a chart of their past years, excuse me, past years worth of trading. And so we can see, obviously, they sold off pretty hard in the market back in April, but have had a fantastic recovery. And unlike the broader index level, ICE is actually broken out and set numerous new 52-week highs, whereas the S&P obviously has not done that quite yet. So, we're having some very strong performance here for ICE. And you can see even just this past week, we actually set a handful of new 52-week closing highs. And so in the chart, you can see how our two EMAs right here. We have our shorter term above our longer term EMA. You can see the very recent crossover is really like on one of the first trading days of May. So this new buy signal that's being generated here for ICE is really just about a month old. So it's a very fresh new buy signal. Stock is trending higher, making a nice series of higher highs and higher lows. So love what we're seeing from the technicals there. We also have our Keltner channels on the chart here. And we can see that at current price levels for the stock, trading just a touch below 180 per share. So you can see that upper Keltner channel is up here. So at current prices, this is actually signaling that ICE, even though it's had a great run of late, is actually not trading at an overbought state. So it's offering a pretty attractive entry point for a trade. And we're also getting confirmation from that down here in our RSI chart, which says the relative strength index chart. You can see that the RSI for ICE is actually below the level of 70. It's just about 64. So that's also confirming that we do have one good relative strength for ICE, but it's also not too overbought. It's not up in the nosebleeds. It doesn't run too far too quickly. So it's offering a pretty attractive entry point for a trade.
Yeah, that's amazing. I always forget about the exchanges. The thing about this, the exchanges really don't care if the market goes up or down. They're working off of volume. That's their inventory. And
Hmm.
when you see all this kind of madness in the markets, they're one of the places that absolutely benefits, up, down, or whatever. You're going to see more trading volume. They make money off of the volume. That's what they're all about. So, what a great find, man. This is a good one to highlight. That's for sure.
Yeah, absolutely. And that's exactly right. Kind of regardless of what the market's doing, their bottom line is directly correlated to whether people are trading or not. It doesn't matter which direction stocks are moving or commodities, options, whatever. Just as long as folks are out there trading in the markets and those volumes are increasing, then companies, exchanges just like IC are going to be doing well. And just one more thing I want to touch on before I actually show you kind of the trade idea of how I would look to play this. This right here is actually a ratio chart. So this is looking at the stock chart for ICE, and it's actually dividing it by the current price of the S&P 500. So, just how this works, whatever your, the top end of your ratio is, um, in this case is going to be ICE, as long as that chart's moving up, like you can see right here, or in this example right here, roughly over the past 3 weeks, when that's happening, when the chart's trending up, that means that, ICE is actually outperforming relative to the S&P 500. So you can see in this current, environment that we're in, we've had about 3 weeks where this line is trending up quite sharply. So that means, as I was kind of touching on earlier, that ICE, even though momentum has stalled out in the S&P 500, ICE is still outperforming quite well compared to the broader market, at least at the S&P 500 level. So we're still having very strong relative strength here. It's still moving higher. So because of that, I would probably look, given it's not overbought at current levels, even though it's still having very strong relative performance, I'd probably go ahead and look to try and find a directional option to trade this, this idea here. So went ahead and found one here. This is going to be a call option. And I found the June 20th right here. So this is the June 20th, 2025. And specifically, I was looking at this 165 strike call right here. ICE only has the monthly option expirations available. They don't have the weeklies. So I just
Mhm.
went ahead and went to the nearest monthly expiration. And this one right here is the one I kind of honed in on. So I went ahead and took this trade right here, John. You can see I put it into our call option purchase calculator. So here was of course, the stock ticker, ICE, and here was the price just before we hopped on. It was trading at 179 and 12 cent and at 165 strike call. And again, it was trading at 14.55 points. And just, you can see it has a very nice profit potential it's offering. It meets Chuck's 1% rule. So for those out there following along with the power trend system, this trade would be right in line with the criteria for that regarding the option selection. And you can see just in these different price change scenarios right here that, just depending on how, if ICE continues its run, this option would definitely stand to benefit quite well. So, definitely a nice little option right there. Should somebody want to go ahead and try to play that trend. So that's how I personally would look to do it.
Yeah, that's a great one. That really, again, just really sharp to jump in on the exchange and everything. And am I right? Is this the kind of stuff that you talk about in that the newsletter you have, the weekly profit opportunities? You're, looking for these type of things. You got a following that signs up for this newsletter, and then you let them know about this stuff, and you give them the heads up to get in on these trades. Is that kind of how that works?
That's exactly right. Yeah, no, I have my weekly profit opportunity newsletter, and it's put out once per week. And my members, if you like seeing the trade analysis, just like I did right there for you, my members are getting this, once a week, every week, and it could be, directional trade, spread trade, whatever. I think, depending on, pending market conditions, whatever I think is the most appealing looking trade opportunity given those market conditions, then I'm putting together a video over the weekend and sending that out to my members on Sunday evenings with all that full in-depth trade analysis, focusing in really on one trade there, telling you why, I personally think, given market conditions, I think it's, a strong setup and why I would consider it. And, I'll include all the option details, pricing, profit target, stop loss, everything like that. I include all that in there. So a lot of good info in that video.
Yeah, that's a great way to start the week to have somebody spend all weekend doing your homework for you. And it sounds like that's what you're providing there is doing a lot of the heavy lifting, following through all the data and all that to find the great trades. I gotta believe that's a great value. We'll pop a link to that in the email when we send this out to everybody. And for those of you in the room, definitely we'll pop that up in the chat so you can take advantage of it as well. But yeah, that's a great service. I just love these trades. Really quick, the kind of you got the overlook for the week and everything. What's your general sense? Are we gonna just keep this kind of momentum to the upside, or do you think it's gonna start to go down? I know you kind of are hitting everybody. The safe bet is the range bound market, but I mean, you think we're hitting the top here?
Well, I mean, at least certainly in the short term, I think we're going to remain range bound because I was touching on earlier, momentum out, after the past month's worth of performance, adding up about 24% straight up. Didn't have many down days in there. We're definitely due for a bit of consolidation, and choppy just range bound trading. But after that, of course, nobody can predict the future here. But at status quo as things currently are going along. We just had a really great earnings season. That was something that a lot of people were really unsure about heading into it. How things, maybe not necessarily how earnings were going to come in, but guidance. We didn't have, across the board mass retraction of guidance. Earnings are still hanging in there fairly well. They might come down a touch bit more from here, but they're still hanging in there pretty well. It seems like we're starting to get some more progress on the trade front with some of the tariffs. We as long as we keep getting positive developments there, I think sometime throughout the summer, we'll likely resolve out of this range bound consolidation trading to the side, trading sideways and resolve higher and start challenging those, all-time highs that we set earlier this year. So that's kind of how, at least in the status quo, I'm anticipating things to work out.
Yeah. Yeah, like you said, you can't predict the future, and but it's good to have kind of an idea of what to expect, because then you can kind of frame your positions, your trades around that kind of general outlook. You're not looking for where the yellow line is, just kind of setting up the guardrails, right? So
Hmm.
and kind of just keep it on the pavement. And hopefully that's what we can do. And that's what these events, these sessions are all about. These little market chats, just to kind of give everybody a little more insight, kind of rattle their brain a little bit. We got a really smart audience out there. I know that they're aware of a lot of these things, but it's always great to hear somebody like you put them together in a way that makes them actionable and makes them useful for everyone. So appreciate you taking the time out today, Blaine. Great to have you on with us again.
Yeah, absolutely. And I really appreciate you having me here, and thank you for your time. And really appreciative for everybody who tunes in and watches the video, and was here live with us. Really appreciate everybody out there in the audience. So thank you so much. And if you check out my Periscope, hope you really enjoy that. It's John. I think we forgot to throw in. It's actually, you can actually sign up for your first month for just $1, just to kind of kick the tires and test it out if you want to see if you like it. So, but
I don't know how
again.
you can beat that. That's amazing. That's irresistible. So yeah, definitely. We're going to put links to that stuff in the email. So I want everybody to take advantage of it for sure. For a buck, geez, you can't go wrong. That's amazing.
Yep, absolutely. But again, thank you so much, John. Really appreciate you having me here, and we'll check back in on Wednesday and see how things are going.
Awesome. All right, Blaine, we'll talk to you soon. Take care.
All right, take care, everybody.